Victoria, always a pleasure to see you as well. Nice and early coming to us from Houston, but it is much appreciated. You've got some individual names for us, as you always do, but on a macro level, are you concerned that something has materially changed in the attractiveness story for the equity market?
No, Brian, we still like the equity market, and we think there's room to run. Obviously, there's going to be some volatility going on for a lot of the reasons that you've mentioned over the last segment of the show. But when we look at fundamentals, when we look at what consumption and consumer sentiment looks like, it's solid. When we look at regional manufacturing PMIs, that tends to do well still. The trend is still higher, especially looking at like inventory sales ratios. That's at some of the lowest levels that we've seen in decades, and we've got a holiday season coming up. So we think manufacturing is going to continue to do well. Housing's done well. Look at durable goods last week. Even though the headline number was a little bit weak, when you look at that underlying number that relates to capital expenditures, that was extremely strong. So we think the fundamentals are still there. And then if you want to even look at technicals, look at some of the S&P components, the percentage that's trading above their 10 or 50-day moving averages, those numbers have gotten really low. To us, that says we might be in an oversold position. So we're not surprised that we're seeing futures move higher today. We think we're going to start to see the trend shift a little bit this week. Hopefully we have positive weeks for the Dow and the S&P.
All right, now I want to get into some individual ideas because your whole strategy has been, Victoria, and we've talked about it. Yeah, you guys own some of the big cap technology stocks because you pretty much have to for your clients, but you balance that out with other names as well, what you call the barbell strategy. Why is a spice maker like McCormick a good value for you and your clients?
So it comes down to exactly what you're saying, Brian. You do have to have that barbell approach in your portfolio. Not everything can rely strictly on those high-flying names that you're seeing in the market or strictly on what people are doing quick COVID bets. So you see people going into airlines or cruise ships or things, and that's giving you whiplash right now. So we've been looking at trends that we think will continue past COVID. When you look at McCormick, more and more people are cooking at home. We think that's going to continue for a while as restaurants continue to be shut down or at least open up at small capacities. So that's a longer term play for us in the portfolio. But we're also looking at some bigger names. We're looking at names like Walmart, at Charter Communications. We've been adding those over the last month or so. But we actually took advantage at the end of last week of the volatility, and we added Broadcom to our portfolio. That fits into that secular growth story a little bit, but it all boils down to what we've talked about before, those fundamentals, that balance sheet of these companies where you've got strong margins, you've got free cash flow being used to pay like a 3.8% dividend on Broadcom and buying back shares. So there's names out there that you can dig into and have advantages. Visa's another one as we talk about individual names. I know the end of last year, you and I were on Fast Money and MasterCard was my final trade. We love that space and we continue to like it. So we're adding Visa now, the other major player, to our portfolio. So we think there's areas you can find individual names across the board, not just the tech sector, that will be beneficial to your portfolio.
Yeah, and by the way, on Fridays, we had that insider buying segment, Victoria. I don't know if you've ever seen it, but Broadcom's chairman or executive chairman bought $36 million worth of his own stock last week, the single biggest insider buy I've ever seen in our few months of doing that segment. So Broadcom certainly is a name to watch. JP Morgan is also a name that you like. JP Morgan, interesting because a lot of people like it, but the financials, they just can't seem to get out of their own way. They start to get some momentum. Then you got stories about, how the big banks allowed money laundering over their systems, and JP Morgan was named in the story as well. I mean, at some point, do you hang on to the big banks like JPM, or you just got to let them go?
So, JP Morgan actually, like you said, is a name we've added over the last month or so to the portfolio. We were extremely underweight banks, I think, as many people were. We've seen the financials, like you said, really take a hit. But we needed to have some exposure to that area. We didn't want to have absolutely no exposure. So JP Morgan for us is that bank that we think has the strongest balance sheet. We like the management team. So that's where we wanted to put some exposure. But you can have exposure in other places in finance. I mean, look, we said Visa a moment ago. Auto, that's a way to play the financial space. And also S&P Global. That's a financial name, but not necessarily a bank name that has sticky business, good revenues, good margins. So you can play a little bit in the bank side. It's still not our favorite part of the financial sector. Look for other areas within that financial sector like a Visa and an S&P Global.